Make sure you get the most out of wealth, wine, and wisdom, folks. Please follow the house rules. Don't be a wallflower. Get involved in the chat and enjoy this episode of Wealth, Wine, and Wisdom. Fenton, even madder. Well, the jester, the Mad Hatter. I reckon you might be right. Anyway, is this the Christmas edition?
Get into the Christmas spirit. Well, Merry Christmas to everybody. This is the last Wealth, Wine, and Wisdom for 2020. 25, mate.
You're getting ahead of yourself.
25. I am ahead of myself. We're already into 2026. So Merry Christmas to everyone. Looking forward to a last episode. As we crack into it, those usuals, you know what to do. Introduce yourself. Let us know where you're zooming in from today, whether you're on Zoom, whether you're in Italy, whether you're on Facebook, and have a little bit of a chat with us. Remember, we love to hear from you and hear any questions that you have as we go through it. For those of you who have just stumbled across us, you're probably wondering why I'm wearing the hat. Well, it's a Christmas thing. But
not even December yet, Fenton. It's not even December yet.
Mate, well, we've got team in the Philippines and they start celebrating Christmas in July. Yeah, not too wrong. So welcome to Wealth, Wine, and Wisdom. Wealth, Wine, and Wisdom is hopefully your business compass, your investor compass, the voice of reason and the voice of fact in a media circus of clickbait journalism. We've been running this show now seriously for the last, since the beginning of COVID, where Jason and I decided to sit down and dissect the legislation that was coming in thick and fast, inform people about government grants. Jason illuminated a pending property crisis way back then, and we helped investors and business owners take advantage of the opportunity that was in front of them and be able to see through the garbage and the noise that was journalism and political policy. Most of it just designed to scare and control. So Wealth, Wine, and Wisdom, we try and bring the data so that you can make nice decisions. That was nice hat. It was what I was looking at. So that you can make good investment decisions and hopefully be the voice of reason while there are lots of voices of noise. And hey, you know what? There's no better time for the good old voice of reason than when we get into Christmas barbecues and families and friends giving us opinions on finance, wealth, and all things politics. This is the time where ultimately you're going to lose a little bit of money in presents, but you don't have to pay dumb tax by listening to the wrong people, which are generally the politicians, the media, and dumb tips about Bitcoin at a barbecue with your cousins. Maybe they're good ones. We've had some cousins and relatives, or you have, Jace, do some amazing things recently. But welcome to Wealth, Wine, and Wisdom. This is where we debrief the week. We generally have a little bit of a look at what's in the news, have a little bit of a chat about what the number one menaces are up to, and see whether we can provide you some insight that'll help provide you the right roadmap for, well, the end of this year, Christmas, and well into 2026. And we've got some predictions of what the hot things are going to be and perhaps where interest rates might end up and where the market might sit when we come back from our jolly holidays. So, mate, good to see you.
Good to see you. Great to be here. Got the ice in the wine. Hey, listen, I was talking to a good friend of ours, Marcus Pierce, and he says that the Icarians, the Centaurians who live long lives over in Italy, every time they have a glass of wine throughout the night, they start to water it down. 100% for the first glass and then a percentage afterwards. That's why they live longer. Anyway, Queenslanders were onto it long before the Victorians because of the ice in the wine. But anyway, there you go.
Well, we're Victorians, mate. There's not a lot to live for down here. So bring on the wine.
Mate, let's do it. Well, listen, why don't we kick into it because there's a little bit to decant for this week. And hang around, folks. We're going to do predictions for 2026. Last Wealth, Wine, and Wisdom of the year. Well, Fenton and folks listening in, it's on like Donkey Kong. Unless you've been living under a rock, I think living under a roof for a second there, but living under a rock. Hopefully you're under a roof. Unless you've been living under a rock, the world of real estate keeps going from strength to strength. Now, Andy mentioned the old barbecue a moment ago. There's going to be plenty of those at Christmas time, but I guarantee, Fenton, I'd put a fairly sizable bet on that at every barbecue in the whole of Australia, there'll be one topic that won't go astray, and it'll be something to do with either the price of rent, the price of real estate, and or / the price of living. And it's happening, folks. There's, Andy, what we're noticing, folks, we're noticing there is a real tale of two stories in the world of wealth at the moment, especially with real estate, Andy. Those who've got the money paying record dollars. Check this out. Brisbane smashes the record. Their record sale, 25 million. Now, when you look in places like Melbourne and Sydney, there's 50 million, $100 million sales in those cities. I think Brisbane's still got plenty of legs, Fenton, folks. It certainly does. It's the new kid on the block. Certainly, if you like a bit of alternative weather, a bit warmer, a bit more tropical, you might like it. But check it out, 25 million. But what's the thing? Has anyone noticed something in there, Andy? You and I talk about this all the time. Something in here that's worth noticing. What's this little sort of bit down the bottom here when it goes?
Can't read that one down there, Jace. Can you read it out for us?
Let me zoom in. The sale price is nearing triple what the couple paid for, representing an uplift. Andy, tell me just quickly, strategically, as a financial planner, if this is their principal place of residence, how much did they earn just on this little strategy? Tax-free, folks, tax-free. Who likes the idea of tax-free?
Starters, don't ever call me a financial planner in this environment, Jason. You'll get me into trouble. I have no qualifications and profess to be nothing of the sort.
As a fellow ranter this afternoon. But, allegedly.
Well, mates, if it is their principal place of residence, that would enter into the probability of tax-free.
For $16 million in 3 years. That's fucking unbelievable. That's amazing.
That's
Can't complain about that, can you, folks?
I mean, they really do need to tax super within an inch of their lives, don't they?
Yeah, but these rich people, let's get on to these bastards. Yeah. Right?
They're not allowed to be rich in this country, mate. This is the land of opportunity where there is no opportunity. We will not have people happy.
I tell you what, there is a bit of an underbelly of, tax the rich to pay for the poor, or uprising in that space. But if you ignore that rhetoric, folks, and stick to your knitting, there is plenty of opportunity in the world of property investing and the world of share market and business as well. You've got to navigate the rules. That's what we like to give you a bit of a debrief on. But I like this. Check this out. Mother buys a $8 million Sydney house for a daughter studying from overseas. Now, this is the reality. There is plenty of money floating around in the world. The world's never been richer, folks. The imbalance might be something that you are, struggling to rationalize. But certainly, folks, there's plenty going on in the world of property. And
you know whether they want another child, Jace? I'm willing to.
I was looking to see if I could get adopted as well. There we go.
Drop a few wrinkles and maybe go and study with mum. Yeah, that's incredible, isn't it? Wow.
We got a bit of a Merry Christmas from David in Sydney as well. No, darling, I don't want a silly hat. That's all right. I'll leave that to Fenton.
I wore it last year.
He's got the jester hat. Well, no, it suits you. But check this out though. This is another little bit of a pace setter for the marketplace. Listen, everyone's the general gist in the media, because they like a bit of clickbait journalism, is Melbourne's degraded into a slum that you wouldn't like a stray dog to live in, which is complete and absolute bullshit. Melbourne's still a great city. Some of the politicians, need to be shaped up down there.
Hey, watch your mouth. Watch your mouth, Whitten. Not some of them, all of them.
All of them need to pull their pants up a little. But look at this. There's still plenty of money around in the world of real estate. And we're back at it when it comes to luxury real estate, Andy. We talk about this all the time, folks. Certainly Sam Saggers, Andy and I hang out with Sam often. He's been on the show a few times, filling in. the world of luxury real estate is back. And listen, you can live like a 5-star hotel guest, and Melbourne's resurrecting that idea. What's it called? Eloise. I used to read a story to my daughter called Eloise, and she used to live in a hotel. And her dad was a kind of like a, probably not the right scenario, but Donald Trump owned hotels all over the world. Anyway, there you go.
I love a good anecdote that never starts and never finishes. It's good.
Never finishes. Like, as I started it, I'm going, oh, shall I tell this story? I think it's probably not even, well, it's a good one. Anyway, you can live in you can live in your penthouse, and you can treat it like a hotel. I like that idea. Yeah, 100%. Room service, the whole thing. But anyway, there it is.
Yeah, imagine that. It's like it's just a fancy Uber Eats, really, isn't it?
Well, it's under one roof. This is the thing. Here's the drill, folks. We talk about this in real estate. There's 2 markets that have got plenty of money. One of them is the Eloise. That's it. Eloise, she lived in the plaza. Oh, Lily loved that story. But there you go. And the other market is where the government is activating pricing activity that doesn't really deserve to be activated. We'll talk about that a bit later, Andy. But I thought these are some interesting stories, right? We've got, money coming from overseas, someone buying a $6 million house for their kid to live in while they study, record prices in Brisbane. Melbourne's got, luxury penthouses where you can live like a, hotel guest forever. And check out this one out of Adelaide. The investor pays $1.3 million for a property they owned 23 years ago. They owned it. I should have put it on here, but they owned it for $45,000 23 years ago. Now, this is the thing. Listen, I always say, chuck it in the chat, folks, if you're there. What's my saying? And Andy helps me tune it up now. I've got 2 versions of the world, under 15 years and over 15 years. But buy well, don't sell. This person should have kept that damn property. I just checked in on a property that Shay and I bought for $185,000 in the Blue Mountains, and it's worth $2.9 million today. So, there you go. But that's a little bit of the news. What's in the news? What's going on? Debrief the week, Andy. And I might throw over to you. There you go. Deanne's on it. Buy well, never sell. I thought that was good to kick off the news. What's out there in the world? Actually, I've got a couple of other things a bit later, but yeah.
100%. And this is a rule for life, Alexis. 100%. So, Jace, just while you were doing that, I just thought, well, why not Google the value of the property that I sold, because I thought property market's dead, and it was about 200,000.
Yeah.
1.225. So that's a good $1 million loss I made there. That was a very, very well educated decision. Had I met you earlier, I may not have made that decision. So your fault, Witten, for getting into my life too late.
Too late. Should have been earlier. Anyway, what's in the news for you?
Look at these idiots. So just for context, right? So there's the ATO, and the ATO have been taking.
What do you mean context? There is a.
For God's sake! But the context is that they've been taking this idea of trusts, and they've been up to the, I think, Supreme or maybe even the High Court. They've lost all of their cases. They've overreached in cases that they're talking about. These unprecedented entitlements, which basically means trust distributions where the money doesn't flow with the distribution. And they've gone up, they've tested it. The courts have said, no, you're overreaching, get back in your box. And their way of getting back into the box is now the ATO warns family trusts to confess their past errors. And so we might go back to this just while I go through this, because I'm going to read directly from an article in regards to this. But like this is absolute lunacy, right? I've actually gotten rid of the article, but
is it the AFR article?
It is. But so the idea of what they're actually saying here is is a different tilt. So they've lost the battle in the high court or the Supreme Court. I can't remember which one it is. So instead of going, okay, we've lost fair and square, all they do is they try and create a new interpretation around how they have been policing these laws forever and a day in order to be able to suit their agenda. Now, the issue is, that's the one that I found, but it's not the actual one, I don't think.
This one is where they've gone back to the drawing board, Andy, and folks, and they said, "Oh, do you know what we should do? We lost the battle on that other one. Can we just have a crack at now personal services income and the personal services income trust?" Anyway, which has been around forever and a day. There you go.
We might get that one away because that's I think under paid subscription. But well, you guys use our headlines anyway. So
all of it is.
All right. So we're all in. We're all in it together. So the idea behind this, and look out, professionals, because they haven't just named in this article dentists, doctors, which are already under this thing called PSI income.
Yeah.
They're adjusting their interpretation around how businesses can income split. Basically saying, Jace, if you're a business owner and they think that you should be accredited with most of the cash, then they're going to attribute most of that to you, and they're going to make you pay tax on that like an employee would. Now, it's a bit technical, but if you have a trust, right? If you have a trust and you're out there, have a little bit of a chat, a discretionary trust, and you're trading a business through it, have a little bit of a chat with your accountant. Make sure that you're lining things up. Because here's the dumb part, right? So let's just say Andy Fenton runs a business in a discretionary trust. Mags, his partner, maybe is taking care of the kids for a little while and isn't earning an income. Now the ATO is sort of saying, well, potentially we're going to say, Andy, all of the profit of that business we're going to put to your personal services income if you satisfy certain levels of these tests, which are ambiguous at best, Witten, and quite broad and up to interpretation. And they're saying, well, we're going to, instead of being able to pass some on to Magda, we're going to just charge you tax on the whole lot of it, so you can't split that income.
That's that's the personal services attack, isn't it? Like, it's ludicrous.
Do you know the dumb, stupid, like ignorant, like just, it's so myopic, as you would say, and it's just dumb. Because what's going to happen? All right, well, now we employ Mags. Now we employ our children. Now we employ all of them in there. Okay, they win because they get more work cover, so they're obviously working for the unions, right? They win because if we're over $1 million, they're going to start to clip us an extra 5% on payroll tax.
You're going to have to put super in for their crony mates who run the supers.
Yeah,
privately, by the way.
Oh, mate, wait, I've got some stuff on super later on. So anyway, like, it's dumb. And by the way, spending millions, if not tens of millions, probably hundreds of millions of taxpayers' money in order to be able to do this. And the reality is, what's going to happen? You're just going to employ them. That's what's going to happen. You are just going to employ them. Dumb, Witten. Here's an interesting part, because everyone's talking about the AI bubble.
Hang on, before you do that, I just want to show you something, because it adds to your conversation here.
I need adding to, Witten, because I always come up a little bit short. I'm like
you're
at the high jump. I am.
You're like this. You're like this because this kind of connects some dots here, or collects some dots, and But guess what? We've broken another record, Fenton, in and around this theme here. Guess what? What? The ATO's done.
Tax dollars collected.
Boom, boom, boom. There you go. Our 3 levels of government collect a record trillion in taxes. Well done, Fenton.
Well done.
Cheers, everyone. There you go.
Congratulations. You've never contributed more to a place that wastes it more. There you go.
There you go. Oh, yeah. Record. What they say now, they come out with very quickly. There was an article. Record government spending on public servants, and then all of a sudden, we better cut back. 2 seconds later.
Yeah,
you're not wrong. $85 billion later, though. Why didn't they do that to begin with?
Oh, mate, like, I've got some stuff that'll make your skin crawl, your toes tingle, all of that sort of jazz. Look, theme to the future. There's this idea that there's an AI bubble. Calling a bubble on AI at this stage is dumb, Jace. It's dumb. Maybe some stocks are overinflated. Maybe the multiples that stocks are trading on in general are overrated. Maybe, right? But to call an AI bubble, and this is what the fear mongering of a lot of the press have, is just dumb. Because what you and I both know to be a fact, AI is here to stay, and it is going to change the landscape more aggressively than the agricultural and the industrial revolution combined into one, and it's going to do it faster. And the one thing that it needs is infrastructure. And to think that we're in a bubble when we're only just getting started, maybe there's some mispricing in stocks, but that means there's some incredible opportunities on the cards. And I've got one which I'm going to share at the end, which I reckon is one of the big themes for 2026 and beyond. And it's going to be one of those things you miss it, and it'll be those barbecue stories. Oh, I had Apple stock when I was 15 and I had 10,000 of it, or I had $10,000 worth of Bitcoin when it wasn't worth anything. It's going to be one of those conversations, mark my words, we're only just getting started, and anything that points otherwise, it may be a turbulent journey, but anybody who says this thing's a bubble needs their head read, because the only thing that'll stop this is a freaking nuclear war, I can tell you. Not that we're going to hope for that.
Don't be wishing that on us, mate.
Definitely not. But I'm saying it's unstoppable. Like it would take a nuclear event to stop it.
Well, the lid's off. The genie's out of the bottle. The genie's out of the bottle. Yeah,
100%. And like this is the beauty. Like for you and me, it's pretty clear. It's like it's here. All right, let's get on the train, because the train is leaving, and it's going. And when it leaves, it's gonna go like a bullet train, not like a Victorian train, Jace, that takes an hour to get 45 minutes into the future, but more like that new bullet train in Tokyo. Have you seen it?
Yeah,
you can't see it like that. Just
well, this is the really interesting thing, right? You and I were at an international tax conference not so long ago, but it was actually an international tax and innovation conference.
Yes.
And Vietnam have now passed at primary school level. All children will start from year one to learn to use AI tools as baked into their learning in school. Now, this archaic idea that we've got such a archaic attitude towards this new technology, where you've got unions campaigning against it being used in businesses, and now creating more cost and government overreach by a million. You can't use a hammer anymore because we used to use a fucking rock to knock. No, you can't use a fucking hammer. No.
We'll call it the Rock Hammer State. Yeah. That's what we'll call Victoria, the Rock Hammer State. Yeah.
Come on. Right? And you've got places like Vietnam, India, Malaysia. These countries are like, this is our opportunity to
double, triple, quadruple down. Yeah.
Rush.
Absolutely.
Right? This is the thing. And that's, I'm with you. We have to embrace these things. We have to understand them.
And invest in them. Both. That's right. With the dollars and the cents.
Yeah.
That's not a bad one, was it?
I like that, mate. We didn't record that. Listen, AI snapshot. Make sure you get that one for Fenton.
Hey, look, it's only taken me 360 odd days, but finally I came up with something.
Look at us marveling at our own genius that no one else fucking agrees with. Get on with it, Fenton.
So, mate, there's a couple that are kind of over in your neck of the woods. So I want to ask you, because I just saw this. It caught my attention.
Yeah. Mate.
APRA, and the last time APRA jumped in, they caused an absolute shitstorm. But APRA introduced first ever debt to income limits on home loans. Talk to me, Jace. What's going on?
Well, these guys, every time that as far as I'm concerned, what's going on with APRA, there's nothing for them to do because everything's perfectly fine at the moment. So they're looking around to try and find things that are a problem. We could probably do with half of the people who are employed at APRA, and we'd be better off. We'd save some money as taxpayers. But what they're trying to do here, there has been, as water finds the shortest course folks, there has been the idea that investors are getting a better deal when it comes to lending right now. That's out there. Well, it's just a fact. If you can add rent, if you can add rent to your income,
borrow more. Your income goes up, and you can borrow more money. Yep,
that's what's going on. So the servicing is starting to come good for people, Andy and folks. Now, I think this is kind of a bit of a smokescreen to say, all right, we want to lock investors out of the mix, right?
Oh, because that's going to help property prices.
Oh yeah, and I'll show you something in a minute. You know, when APRA gets involved, like last time APRA got involved, and this is I've said this ad nauseum for 5 years. When they got involved in 2016 and 17, the market shit the bed, and that's when our supply issues fell through the floor. I'll show you some stats in a minute. But this is another one of those versions, Andy and folks, where APRA's overreaching again. There's no systemic risk in our system when it comes to lending practices. Like in comparison to around the world, we have a very safe lending practice. And now they're just looking at other ways to put the brakes on investors when it comes to the marketplace. Now, all that's going to do, Andy, you said it already, is going to make supply worse because owner-occupiers, folks, do not bring stock to market. Australia, and then what's happening is then the government's selling our future supply chain to the BlackRocks of the world. I think it's a disgrace. I think APRA is a bunch of absolute idiots when it comes to this stuff. They really don't understand the second and third and fourth tier. They've taken no accountability of what they've done when it comes to the supply chain. No one even thinks that APRA was to blame. APRA is 100% to blame. 100% to blame. They changed all of the lending practices, which were some of the best in the world, and made the servicing some of the worst in the world. Anyway, they're having a crack, and it's I think it's certainly going to affect a few banks, but outside of the banks, some of these ratios actually don't apply when it comes to smart lending. You know?
Well, check out these figures, and I'm going tangential a little bit on one of the dots that you dropped there, Jace, because you were talking about the investor market and how they're not favourable on the investor market. I was doing some research on the foreign capital that's being brought in for the build to rent.
Yep.
And so as at February 2023, which was like 3 years after we started talking about it.
Yeah.
And for those of you who don't know what we're talking about, build to rent is where they give offshore companies and large corporates tax breaks, accelerated depreciation, and 15-year waivers on land tax to non-Australians or corporations. And as at 2023, there were 11 build-to-rent operations that were in operation worth $16.9 billion, and 9 of the 11 were offshore.
Look at that. That's it. It's, you talk about, let's not let, there's this stupidity in the marketplace, very naive conversations where it's like, let's not bring in immigration. Well, okay. There's an argument for that, and it should be managed for sure. But wake up, folks. Like, immigration's not causing that problem. Like, long term, there's a systemic issue. You've just sold billions of dollars, how many? Like $8.5 billion worth of your real estate to foreign-owned fucking corporations for the next 15 years.
Well, it's
right under your nose.
It's now well above 30 just for this year, apparently. And that is 30 billion that could have been Australian investors. You and
me, Fenton. We could have been benefiting from it. It'd actually play back into the Australian tax system.
Yes.
Right?
Rather than money going offshore.
That's right. We'd be paying full rate on land tax. We'd be paying full rate on stamp duty. We
wouldn't be lining our own pockets, Jason, if
we'd be paying less in tax deductions and depreciation. It's a joke. It's my big bugbear. Australia's going to wake up in 10 or 15 years and go, what the fuck did we do? We just sold 10,000, 100,000 of our properties to overseas corporations, and we kick up when we sell a fucking farm to, the Chinese, but you're not kicking up when you're selling 100,000 of our apartments to fucking BlackRock. What a joke. Absolute joke. Anyway, there you go.
So in the same scroll of the news, I picked up this one: banks to increase home lending in 2026 despite the APRA crackdown.
Hey,
so I love this. I'm like,
the banks are like, piss off.
it's great, isn't it? Like, it's not often that you see them doing this, but it's kind of like the banks are going, you know what, bugger you, like
Whatever, mate.
We're off to the races. We see the future, and we're living there, and we're going to take it. I actually like that, because that's the first time I've actually seen the banks do something like that. They're always in line and trying to play politically correct, but this time they've just gone, okay, hear you, but not listening to you.
Well, I mean, after the GFC, Andy, was probably the first time that I remember, and I don't have that long a memory in this world, where any of the interest rate movements or the cash rate movements, the banks just decided to do it at their own pace. They'd pass it on or not pass it on, or they'd pass some on and not pass some on. It wasn't in step anymore. They were like, we'll do it our own thing. This is the thing. This is the thing with banks. Bro, we both know that Australia has, when it comes to the business wealth in Australia, we're not that diversified. Let's face it, right? I found this thing the other day.
We're not. I think that now the banks make up an extraordinary proportion of the market.
Extraordinary.
Top 50 is close to, if not over 50% of the market. Like, it's scary. We're very, very concentrated.
Yeah.
Which is socialist in its nature. It's anti-competition.
Well, it's totally anti-competition, especially when it comes to the banking and mortgage world.
And we jump up and down so much about competition. It's like, well, create an environment to allow competition to thrive.
Yeah.
Tax cuts for businesses, incentives for programs for businesses, less red tape, more capabilities to be able to do more with less when it comes to business, and allow the winners to win. Right? And allow them a fighting chance. And that doesn't mean tax the rich, not by any stretch. Hey, but interesting anecdote. Do you know what the number one stock for this year in the US market was? In the US S&P?
Nvidia.
No. It was actually Robinhood. That was just, It was like 225%. I think it was in the S&P 500.
That's crazy. There you go. The house always wins. You're dead right, Sarah. The house always wins. Understand the rules and understand how they apply to, what's going on. Yeah, absolutely. Yeah. Well, listen, let's go to this one, I think. The hits keep on rolling when it comes to the real estate game. Talk about the house always winning. If you've got a piece of the action, if you can get in on it, there's a few things going on. The Perth house prices tipped to jump 16% this year. Well, that's great. If you got a piece of that action. However, there's a bit of talk about Perth having, a fair bit of rental stress. Now, why is that? Because there's no frigging properties being built, folks.
It's not actually that complicated, isn't it?
It's not complicated, right?
Prove houses so they can be built. Let's just start there. Hang on. My mistake. Somebody would have to do something for that to happen.
Lunacy in all respect. And land values in Sydney reach a record unprecedented, Andy.
Unprecedented.
$2 trillion milestone. Yeah, and that's happening everywhere. I saw, unfortunately, some insane land tax calculations going out for people on land all over. Especially, it was hammed up in Victoria, but it's everywhere. But, the underlying value, the government is crying poor on one hand, going, we need to collect more taxes and whatever. And then the state governments are pillaging on the way through when it comes to
It's a beautiful hedge. That's a really nice hedge.
Yeah, exactly. Well, the world of real estate is not too bad. And I had that one there too, the APRA impost. But this is an interesting one, right? You have a look at whenever the market gets involved or APRA gets involved when it comes to trying to to restrict. Now,
well, hang on, just explain what this is, Jace, because DTI sounds like something that you would catch on a Friday night if you weren't careful.
The debt to income ratios for
income ratios, okay.
Yep, for borrowers, right? So okay, my debt to income. Now this is an interesting one. They've got some bizarre ways of calculating this, as far as I'm concerned. But right now, because the calculations aren't working out as well as they want, now they're going to say, all right, well, we're going to say there's going to be a 10% restriction on investor lending. That's what they're talking about for high debt to income ratio lending. Right?
Is this APRA?
This is APRA.
This sounds like a policy. This sounds like a socialist policy.
Completely 100% socialist policy. But hang on, did the world collapse and end when we had a 30% of the lending to investors up there? No, world didn't end. Like what? I mean, come on. But it's complete and absolute bullshit, right? It's complete bullshit in that sense. They're coming up with different ways.
What happened in the middle there, Jason? Were they just too lazy to join the graph together?
It broke. There was a couple of months they were like, "Fuck, we've had enough of this."
It's just like APRA's like, "Oh, we can't join the dots, so we'll make them up."
We'll make them up. Well, Sarah, one of the team from the Positive Money team, could probably explain this in a little bit more detail. And I know she did a Wealth Coffee chat this week as well. But, listen, the debt to income ratio, at the end of the day, what they're saying is like, we're going to make the banks now stop lending money to investors. Well, that's not going to help. What's the outcome? What's the point? That it's like, we think it's high risk lending. Piss off. It's not high risk lending. How is it high risk when you've got an investor that has a job, gets tax deductions and rent? When you've got a first home buyer, this is the thing that blows me away.
But hang on, Jace. You're a human being and you're an Australian, which means you are too stupid to make your own decisions. You're not allowed. Now don't cross me on this, Jace. You silly little boy, are not allowed to make your own decisions. You're not allowed to take risks in life.
You're not capable, Fenton.
You and we have to protect you. Because you're a moron and you might hurt yourself. And if you hurt yourself, then what happens? The whole world ends.
Yep. No,
it's not right. I'm with them on that one, Whitten.
We should be protected. But, on the flip side, we'll lend somebody 1.5 million. And if you can't afford it, don't worry, Andy. Don't worry. We'll come in with you. The bank of the Australian government / the Australian taxpayer will be 40%. We'll jump in on it with you, mate. No problem.
That's different, Jace.
Mortgage insurance? You got problem with mortgage insurance? No, we'll give it to you.
That's different. That's different. That's not the bank's money that they're spending now, Jason. Don't be silly. It's not the bank's money. It's our money that they're spending now. That's different. They can spend our money however they want.
So this changing this cap here is not going to change. That's not inflationary. That's not going to push up. Come on, Andy. Come on. Come on. That's not inflationary. Hang on. Here's another idea. New South Wales, in their great wisdom, have said, here's how we fix it. We as the government are going to underwrite pre-sales because we know there's a problem. They're going, shit. They're going, hang on. All right, Andy, let's do this. I don't know. This is just free flow. Andy, we've got a problem. We can't bring any stock to market. What should we do? The problem is no investors can afford finance. The price of the properties is super expensive.
Because we made them that way.
Yeah, we've made them that way. But listen. The banks need pre-sales to bring on the construction, Andy. What can we do? Like, we're the New South Wales government.
Have we got any money?
Well,
no, we're broke. No, we don't have any money.
No, we do. We got taxes. We can. Can't we just
taxpayers' money?
Yeah, taxpayers' money.
Oh, yeah. Oh, we can just raise taxes. Yeah. We're not. We can spend that however we want.
Why don't we? Now, listen. There's a few developers, a couple of our mates. They need to get finance. bring these developments to market.
Just our mates.
Yeah, just our mates. Why don't you and I buy them? We'll say, hey. We'll say, listen, developers, we will sign the contract. The New South Wales government, we'll underwrite it. We'll do it.
Not with our money, though. Just so I'm clear, not with our money.
Well, it's not you and me, right?
No, it's somebody else.
Someone else.
Yeah, okay.
Taxpayer. That doesn't matter. But
they're not relevant.
But here's what we'll do. We'll say, listen, we'll get a discount though, 10%. 10% discount. 10%. That's what we'll do. We will sign a contract, 10% discount. What do you reckon?
Because that'll immediately push the prices of property up.
Yeah, but who cares, right? It'll sit.
Well, no, but we're now owners in that property.
We're up. You're genius. You're a genius, Fenton. We're back.
We're back,
Mortimer.
That's it. My only question is, how do we get it out of the federal system and into our own pockets, Jason? Hang on, that's a conversation for another time.
Let's
I love
take
it.
two on
I
this
love
one.
it. So let's gamble with taxpayers' money.
Yes.
We will underwrite property, which will put property prices up, which is a return on our money.
Because
which
they're not real sales.
Which
they're
increases.
Not real sales.
No,
they're not real sales from real people from a real market. They're inflated sales. They're zombie sales, right?
Yeah. Yep. Hey, listen, if, at the worst case scenario, we can get all of those people who are on the voting register who are actually dead. We can get them to buy them. That's about that.
But Andy, will it be inflationary? You know about these sorts of things. Will that be inflationary? No.
We won't say so. We won't say so. But
maybe we'll just take it out of the basket of goods. Let's do that next time.
Take housing out of the CPI figures. Yes. That's genius. That'll bring inflation down, and the ATO will, the Reserve Bank will be forced to drop interest rates.
That'll help. That'll help the cost of living, won't it?
And then it cheapens the amount of debt that we have to pay back. Not that we're ever going to pay it back, but no.
Well, that's someone else's problem, right?
Brilliant. Yeah.
Genius.
I love it. What could go wrong?
What could go wrong? Anyway, it's the blind leading the blind, the stupid leading the stupid. They broke the system 5 or 6 years ago with APRA's insanity. And I think, unfortunately, the future taxpayer is going to have to pay for their insanity. And until there's enough pain and people realize that the government are just brain fucking dead,
pick up
they need to change them over. Anyway,
but you know what? There you go. The idea is that, hey, everyone, just learn more about this stuff. Get more educated on it, because eventually it's just going to cause us a lot of pain.
Well, that's where you and I try and bring a little bit of awareness. I don't know if we're funny or just sad in our rhetoric when it comes to this stuff. But what's the upside, Fenton? Folks listening in, the upside is if you are an investor, rightly or wrongly, whether you own good quality or not, whether you made a good decision or a shit decision, you're going to get an uplift, folks. Your values are going to go up in value.
Because
your rents are going to go up in value.
It's underwritten by our taxes.
Yeah.
It's a bit.
Well, you're hedging stupidity, aren't you? If you're not in the game, you're hedging the dumb decisions made by our politicians. But anyway,
insane. It's the right side of dumb tax. Well, talking about the number one menace, I've got one for you. So let's come back with our good old favourite.
Hey.
Well, Jace, we've been talking about it for a little while, right? And I think Jacinta, our favourite premier, just behind Dan Andrews, one of the great leaders of the Western world, or is it Eastern world?
Third Reich, I don't know.
So, Victorian Premier says $4 trillion in superannuation. Oh, let me read the other one. Victorian Premier Jacinta Allen has called on Australia's being Australian, $4.3 trillion superannuation sector to play a greater role in funding hospitals, schools, and other critical infrastructure, saying the funds have an obligation to invest their member savings into projects that support workers. Holy shit, Jason. Wow. Wow. So just before we riff on this, I just want to take you through some statistics. I've spent a bit of time to put these ones together, so just bear with me. I'm going to go through them reasonably quickly. But the context is Jacinta says that the superannuation funds, by the way, even more reason to control where your super's invested.
Yeah.
Superannuation funds, she is pushing for them and saying that is their obligation to invest in government projects. Like, read in between the lines, folks, government projects. So let's have a look at the investment returns and the budgets on government projects. Over. All right, I've got them, mate. I've got them here. All right. So
sounds like a great return, Fenton. We're in.
So let's just say that they get their hands on that $1 trillion pool. So let's see how they've spent the money on infrastructure projects. So SRL, Suburban Rail Link. Andrew's government described the whole thing to be around about 50 billion on the high side. That was back in 2018. Latest independent cost estimates at the moment are $216.7 billion.
What?
216.7 from 50 billion to completion. They have now spent $216 billion. Right, so that's almost 5 times. So they,
yes, mate, those union leaders have got some good houses, mate. Like, hey,
all right, look at this. So, Northeast Link, initially promoted at about $10 billion when it was originally announced in 2016-17. Now, latest published cost put at $26.1 billion, a mere 2.5 times what the estimated original budget was. So it doesn't stop there. CityLink and the Metro Tunnel, Victorian budget, $10.9 billion was the estimate. This one was a mere 23% increase of another $3 billion. So that was their best project, only being 23%.
Well, that's pretty close. Only three extra billion. Right.
Then we get to the good old West Coast.
Hang on. I just want to do some math. So it was only 3 billion, right? So it was only 3 billion.
3 billion.
So 3.8 billion. Was that correct?
So it was 3 billion over, 3.48 billion over.
Divided by 27 million, because that's the population, right? That was only an extra $140 per person, Fenton. That wasn't too bad.
Do this one. Do the difference between 216 billion, which is the actual cost, and 50
billion. I love this. Oh, this is crazy. All right, there you go. That's $8,000 a person.
$8,000.
$8,000 per taxpayer.
And this was only a Victorian project.
That's only one project.
And we're not talking about Victorians. We're talking about the entire population of Australian. So it doesn't stop. Right. Doesn't stop. All right. So Melbourne Rail and Westgate, 5 billion, ended up 11.9 billion, over double, blew the budget by over double. Melbourne Airport Rail, which hasn't even started yet, 10 billion, latest publications, 13 billion, and they haven't even started it. It's gone up by 30% without anything happening. Then the level crossings that were brought out, 6 billion, ended up 6.7, 50 ended up 60. Then the regional rail, 1.75 billion, ended up at 4 billion. Then the Murray Basin project, this is the ripper, right? The Murray Basin project, 220 million, ended up at 568 million, 150% increase on what it was meant to cost. And then our favourites, the Metro Trains high capacity line, 1.3 billion, ended up at 2.1. So on average, their results are astoundingly horrific.
Yep. Yes. No, that sounds like a great bet for our super.
I love it. Back on track. I mean, I'm telling you, Jace, I am just falling over to put my hard-earned superannuation money into these incredible projects where money will evaporate like a meteor into the sun, like just absolutely disappear.
I'd back it if it was private enterprise with no unions. That's what I would do. And you have to put a budget in, and if you don't do it on time and on budget, you're
You get the money
penalised.
back.
Yep.
So, but you know what? Maybe I'm just picking on Victoria. Maybe Victoria is the only problem. But let me give you a few statistics on Victoria right now. And I'll get to that in a tick. But like, let's be fair. The problem is national. Jace, we should start a web services company pitching for government projects because the Bureau of Meteorology, ladies and gentlemen, the Bureau of Meteorology. Now, this is
everyone needs to know that the bad weather's coming and it's a disaster tomorrow every 5 seconds.
Everybody needs to know. So this is insane. Taxpayers paid premium prices for a downgrade on the Bureau of Meteorology website. Originally quoted at about $4 million, ended up at $96.5 million.
Who's managing these projects?
Like,
what?
I don't know about you, Jace, but when my website went up from 5,000 to 6,000, I had a conniption. Like I had an absolute aneurysm. And I'm like, I was jumping up and down, yelling. I was holding off on invoices. I'm like, no. You hit on price, on target.
This stuff should be 100% front and center, public.
No, the Freedom of Information Act.
Freedom of Information Act.
It's being changed, Jace. You have to pay for that, but it gets better. The beauty is that, don't worry, we're spending your money wisely.
There it is.
We're employing more people to fix the problem. That is the problem.
We created the problem.
Now, public service has grown to 38% in 4 years. 38% of our pool it's insane, reaching $111 billion this financial year.
Lunacy.
If it was a publicly listed company, they would all be in jail, Shay. But where did it go? Is it here? Hang on. Let me find it, because it might have disappeared because I was cutting over stuff so much. But there's something fascinating, and I think it's just. And I'm just going to come back to the original headline here. I think it's just because I read this and I almost fell off my chair when I read it. That Jacinta Allen is now the highest paid premier in Australia. The highest paid premier in Australia, above $500,000. Now, let me...
You're right. You know, Melbourne's fallen from the most livable city in the world to... You wouldn't send a stray dog there. You know, in the public eye, the most indebted state in the country.
Let's just put that into a bit of context. Let's finsplain this to you, right? Let's finsplain it to you, right? So let's have a look. Debt as a percentage of each state's income. All right. So Queensland, 1.1% debt to income ratio. Yeah.
That's all right.
I reckon you'd pay them a bit, wouldn't you? You'd pay them a bit. Western Australia, 4.3%. All right, that's pretty good. You'd reckon, geez, they should be getting some good earnings. Those are good debt to income ratios. Tasmania, 8%. New South Wales, 11%. That's getting a bit frisky. South Australia, fucked if I know how that happened, 13%. I didn't even realise they existed, to be fair. I'm pretty sure it must be on the agricultural sector.
Oh, that's a downturns in the wine. Yep.
So we've got Queensland at 1%, South Australia at 13%. Where do you reckon Victoria sits, people? Where do you reckon, as a percentage, where do you reckon Victoria sits? Where do you reckon?
Come on now.
It's 2%. It is. I was just setting you up. I'm joking. It's 22%. 22%, almost double its closest neighbour. Yet our Premier of Victoria is the highest paid Premier in Australia, and by a considerable margin. And I ask you, do we get any type of value for that money?
Well, I suppose if someone was asking me to do the job, I'm like, mate, I'm not doing that for cheap. Well,
they haven't done anything for cheap. Like everything's been up. Hey, listen, we'll do it for 10 billion, but we'll really give you 43 billion. How's about that?
It's like, you know what? What quote, Andy? I need a bridge built. What quote? What are you going to give me? Quote? Yep.
Well, it's going to cost us 10 billion to do it, but my family need to eat. So, and the bikies and the people downstream. So I reckon 46 billion is where it's going to end up, but we'll quote 10. Is that all right?
All right. Yeah, if we do the quote, no problem. I can slip the 46 billion through, no problem. Yeah, let's get it done. Yeah.
Well, Australians are stupid and they won't care.
Yeah.
Like,
that's exactly what's going on. It's crazy.
Like, and somebody said it earlier on. If it was a listed company, they'd be in jail. They would be bankrupt, and they would not be able to operate a business.
Well, they wouldn't be able to pay their frigging tax bill anyway.
It's a Ponzi scheme, Jace.
It's a
Ponzi scheme.
And it's like, oh, hang on. The hardworking Australians now need to rescue us from our fucking brain dead stupidity, the decisions that we've made. Oh, and that's crazy. Crazy.
So here's the stats. We're getting a little bit late on, but I'll give you the stats behind it. So you know this one well. Housing is an issue. If we build more houses, like lots more, will that decrease the cost of houses? Well, it will start helping, won't it? Are we producing any more?
What it does is slows down the rate of growth, right? So that's what we really want to do. We want to chill it out for a while, right?
As many people as there are houses, there's a neutral market.
That's right. Just chill it out for a while. And what happens is, this is the part, it's really interesting, Andy, because you and I were in America a little while ago. America's got enough supply in the country where shit properties are just always shit properties, right? But in Australia, let's be fucking honest, shit properties are worth way more than they should be. Like, they're just rubbish, and people are paying $1 million for them because there's not enough supply. It just hasn't come through. It's just
but hang on, Jason. We're a big Oh no, we're not. We're tiny. We're not even the population of New York.
Lunacy.
So they're not building things to fix it. Wrong one first. This is the trimmed versus the mean inflation. So this data, team, everyone should be taking a look at, because this is going to dictate what the Reserve Bank do in the future. And this is something that is a little bit alarming. And I'm going to
what's your call on interest rates, Fenton, for next year? Let's start making some calls.
I'll tell you in a tick. I'll give you the background. Inflation is up. It's largely up on government spending. If we have a look, so inflation has kicked, and unexpectedly kicked. We should have seen it coming. This is the contribution to the inflation kick, because it's pushing up towards 4%. Have a look at this one here, Jace. What do you think that this magic little... what do you think that this magic red one in the middle is?
I was going to say housing. Yeah, but we need to take that out, Andy. We need to take it out.
Oh, we need to take housing out. Yeah, we need to take it out. But housing is the one. But hang on, we'll get that under control, won't we? By giving the first home buyers grants at 5%, and now letting them get into the market at 5%. Yep. So have a look. Oh, geez, I didn't pull it in. Guess how much? Housing contributed to inflation over the last quarter, Jace. Give me a number. What do you reckon it is?
I think I saw it 6.5%, didn't it?
Yep. And how much did they give you? They gave you an extra 5%.
Yeah.
And it caused a 6. I think it was 6 even. Right. So 6% increase into the inflation data. Now, that direct decision, amongst other things, but that had a massive impact. Then the other major government manipulated, and we talked about this last week. So, ladies and gentlemen, put your air conditioners away, because electricity prices over the year, have a look at that increase. That is outrageous. That's a 4.0 there, Jace.
I was going to say, is that 80% up from a low base, or is that 40% up from the zero? Like, is that?
Well, that's the annual increase over time. So it's up 40%.
That's lunacy.
Now, that is government controlled, government manipulated by all the subsidies that they put out there. All of these. So these are all in here, government manipulated policies. The government putting more money in your pocket today, which creates a big gap when they take it away tomorrow. But what it does, Jason, have you ever lowered your prices in business?
No, not a thing I'm party to. No.
I mean, it is
because
Black
the
Friday.
people that I pay who've got a pay rise from last year don't want to get paid less.
100%. So what they're doing is they're allowing the industry, when they give you a subsidy in electricity, they give you a subsidy, then prices regulate to that subsidy. And when you take that subsidy away, the electricity is the subsidy more expensive, but you don't have the subsidy anymore. The simple of, we discount it by $100. Prices rise by $100. We take the discount away, or we take the subsidy away. Now it's $100 more expensive, and that is what they've done. So where are interest rates going? 10-year Australian bond curve, not too different to where we saw it last time.
Yep.
This is the predictor of interest rates in Australia in 10 years' time, and that's sitting at a solid 4.5%. Let's have a look at the 5-year curve. So this is, where do they think interest rates are going to be? The cash rate, meaning is going to be in 5 years' time. That's at 4%. So looks like they're going to rise at the moment, but here is the more sensitive side of the equation. And we were looking good until the government just did their stupid shit, short term, put money in people's pockets, win votes, and create long-term pain. You can see that that's kicked here. And if we have a look, that's a big increase. And so it's on its way up to 3.7% cash rate. And you might say, well, where are we? We're in the zone, right?
Yeah.
So if you look at that, that's the 1 year, that top one here, that's the 1 year estimation on interest rates. We're a little bit below that at the moment. So all things are pointing towards hold or early. My call is early year rise. And this is not just limited to Australia. This is in a few different areas. So to give everybody the update of markets, and then I'll make a call in a couple of minutes. I'll throw back to you in a tick, Jace. But what have the markets done? Well, largely over the last month, markets here and internationally have largely been negative. Bitcoin, I think digital gold is that needs to be thrown in the bin, because the market kind of goes whoop and has a tiny little bit clawback, and Bitcoin's like streaking across the field like, oh, life is over. But it's had an incredible rise to fame. Had you been invested in the ASX over the last year, 2%. Had you been invested in the American S&P 500 over the last year, you would still be up 13%. The NASDAQ, which is the tech index, effectively, you'd be up 21% for the year. If you're in Facebook, Amazon, Netflix, Google, Nvidia, and those core tech stocks, right, you'd be up 26%. If you're in Bitcoin, you'd be down 5%. If you're in Tesla, you're up 28%. Tesla won again. And that was my prediction at the beginning of the year based on this chart. So I'm fucking stoked about that. Defies gravity. But here's the thing for investors. 5 years plus, 10 years plus, that's how long we're in the game. Australia, 30%. America, 87%. Technology stocks, 105%. FANG index, 142. Bitcoin, staggering 481%. And Tesla, 118. I saw this sort of meme the other day, Jace, where it was like, oh, Bitcoin sucks. Negative 20%, positive 800%, positive 7,000%, or something like that. That's investing. I do have one more trick up my sleeve, Jace, which is my major prediction for the year, but I've spoken a lot. But the thing is, interest rates, if the government keeps spending, if they keep doing this dumb shit, like these crazy policies, it's going to cause a short-term spike. And here's the thing. I reckon it'll be a short-term spike where interest rates might actually just go boop, up, maybe 1 or 2. And then I think they're going to realize that they're going to lose, and we possibly could have changes of government in various different states. And then they'll get it back under control. And I reckon then medium term we'll probably have a little bit of a lull, but it'll then settle in and around that historical long-term average of about the 4%, but that's probably going to be over time. So I think we're in for a little bit of variance up and down based on government policy for a little while. And here's the thing. It's the government's fault.
Yeah. Well, and squarely, that's not even taking the piss. Like that is just absolute
Policy.
It's absolute policy. It is
Outrageous.
it is vote buying bullshit, and they need to account. And
38%. It's over 1/3 of the population works in government related industry.
And then the overrun in all of their projects, fucking lunacy. Now everyone had a bit of an overrun in COVID. It just fucking blew up fucking everywhere. But hey, get control of it. Fucking private industry have got control of it. Why is the government still kicking the can down the road? Fucking 3 years later, 4 years later, absolute joke. So yeah. Well, it's a good question. Should we fix home loan rates? Good question. Reach out to your mortgage broker because it is depends on where and what you have exposure to and what access do you want to your equity in the future. So is it a cash flow thing? Is it a access to equity thing? And that's a great question. And Sarah, who's on here today, can answer those questions one-on-one with you if you want. So right there, if you want to book a meeting with one of the finance team, click on or scan that code, folks, and follow the bouncing ball. You'll be able to do that with the team. Sometimes you need access to equity. Sometimes you want to lock down your cash flow and make sure you know what your costs are. Two different behaviors as you go forward. But listen, for me, folks, Andy, pretty straightforward when it comes to what I see on the horizon, especially for 2026. This is the trajectory of total dwellings completed. It's not. It's not a fucking great trajectory.
No, there is no blue pill there, is there?
No, there's not. And so this is the thing. I see this, and a lot of people go, "Oh, well, total dwellings commenced." Now, this is the thing. Does that include all of the dwellings? Well, it includes all of the dwellings, including build to rent, right? So this does not include stock coming to the free market only. It includes all of it. So in essence, what some of this stuff is misleading as far as I'm concerned.
They
probably
mislead you. They're the government.
They're the government, ABS, right? A little uptick, which is from 40,000 to 45,000. It's not even close to what we were meant to do for 1.1+ million houses a year. It's not even happening. Or one in 5 years.
It's also a lag indicator, isn't it? Meaning that it's not the leading indicator. Leading indicator is approvals.
Yeah.
This is then commenced, and then there's completed, which the three are not 100% correlated, are they, Jace? Like, if you approve 100, 50 might get started, and 45 might get built.
That is correct, and they don't correlate, unfortunately, and they're not one leads to the other. There is attrition in significant amounts.
We've seen more builders go out of business in the last 3 years than we have in the history of Australia in any year.
Well, that's it. So what's that going to lead to, folks? This is what we're saying. Really, there's no end in sight when it comes to the restriction or the improvement of supply. There's only restriction. I think it's going to get worse. The net supply to the free market is going to get worse, especially if APRA get their mojo on and try to restrict investors. Because I'm telling you, folks, investors are bringing stock to market only just at the moment. And if they fucking don't bring stock to the market, if APRA then kicks 50% of the investors out of the market, the only people who can bring stock to market are BlackRock, and then it's not on the free market, and then it's the government, and it's only going to fucking increase house prices or property prices another 10% or more. And it's only in New South Wales anyway. It's brain dead. Anyway, don't get me started.
I think we're in for a big bonus at BlackRock. No, they don't even care. It's not even rattling the tin.
Nah, but listen, all locations are looking fairly solid for next year. Different scenarios depending on whether we get rate cuts, lower, and so on. This is from SQM Research, which we love. They're probably our number one go-to crew, which got SQM Research and Dr. Andrew Wilson. We combine those two, and they're really the ones that are really nailing it each time. Mentoring the next on Monday, folks. We've got Dr. Andrew Wilson for the final part of this year, but he's doing the forecast for next year, so you don't miss that on Monday night.
That'll be one to hit. Yeah, 100%.
Yeah, it's a good one. But Andy, folks, we're looking pretty solid across the board, to be honest. You know, everywhere's looking positive, depending on what comes to town. You've got your big hitters, which are sort of Brisbane and Perth. You know, they're the sort of the favourites on the block when it comes to growth across the scenarios. And then you've got your Sydney and Melbourne, which is the ones that opportunity buying at the moment. So really, they're the marketplaces. Certainly, I love Sunny Coast and Gold Coast. They're always worth a piece of the action. But that they're a piece of the property action, by the way. But that's what we're looking at when it comes to our forecasts and those marketplaces. I think I did the dwellings twice. I was going to do the rents, but the rents are looking pretty good as well when it comes to vacancy rates. They're really quite low. There's no supply coming to market. So your rents are going up, folks, and your values are going up, irrelevant of where you are in the country. I think if you've got opportunity buying in Sydney and Melbourne, I think those markets are still got a little bit of headwind when it comes to PR and reality. So you'll buy a better location for the same money. If you want momentum markets, you got Perth and Brisbane. That's really what you're doing.
This was, and probably I'm going to open a can of worms when we're already over time. But I was chatting with one of my team today, and it was a great conversation. And it was like, can we buy in Melbourne? And I said, well, this is just the way that I think about it. And I'm absolutely not a property expert, right? I've been wrong more than I've been right about property, but I am somewhat of a I said, look, I am an investor, and I subscribe a lot to the Buffett theory, which is be pessimistic when those are optimistic and be optimistic when those are pessimistic. And everyone hates Melbourne at the moment, and with good reason. Like, we've got the highest land tax, we've got a whole lot of these things against us. But my rationale, I'll just think out loud, and this isn't advice, this is just my internal thinking because I'm looking at real estate in Melbourne. And I was like, politically, there's a reasonable chance of a change of government.
Yeah.
If a change of government happens, it did happen even in the days of Kennett. He was a Labor government, but a Liberal Victoria. And I was like, well, if that happens, there's a good chance that those laws are going to get repealed reasonably quickly to provide some relief and then some opportunity. And I was kind of thinking, maybe, and I didn't know, but I was like, well, I think, has Melbourne ever really took off, or has it just been one of these things that just creeps up over time? And it's kind of like, we've had some of these ones that have just launched like a rocket, but maybe with some political adjustment, we're now the cheapest state in Australia, which is just obscene.
By far, even cheaper than Darwin. I mean, Darwin's got 100,000 people in it.
Mate, what I'm looking at is a $1.2 million place, which is a 2-bedroom, 3-bathroom, double story in Richmond. And it's like, where do you find that? That's 1.5 to 1.7 in Brisbane. It's 2 million plus in Sydney.
Yeah, and more. Yeah.
You don't find them in Adelaide. They don't exist, and they don't exist in Perth, right? So I'm kind of like, maybe I think there is hope, and unless they just bury the state, and I can't see that that's happening, but things always change, and Victoria has been through a lot of pain. And when we talk about pain equals change, I think that Victoria is kind of on the edge of that, because our crime violence off the charts, crime off like all-time highs. All right, Andrew, I hear you, what you're saying, and I'll just shut up. But I was just wondering, like, when I say that, what do you say, Jace? Because I know nothing about this sort of stuff, but I kind of look at it and go, when things are running hot, look where they're not, and go, maybe there's a long-term creep because we're so far behind. Eventually, we've got to end up like, we can't be poorer than Queensland, for God's sake. Like, seriously.
No, well, and I completely agree with you on that. At the end of the day, my let's call it 25 years in the property market. I've had three good cycles, three different types of cycles when it comes to the growth. You know, at the end of the day, the idea that if you have a look at the fundamentals, get rid of the political stupidity going on,
because that changes.
It changes. It's cyclical, right? So, but underlying, you've got, you know, one of the largest populations in Australia. You do have actually good geography in Melbourne that you can expand.
Tennis, AFL.
Yep. You've got great sport. You've got good geography for expansion. You've actually got a reasonably proactive planning system in Melbourne, which can actually easily add value to the infrastructure there. And it's just sad that they can't fucking bring a project in on budget. But you know, at the end of the day,
all your mates need to get paid.
At the end of the day, you kind of say we've got the second largest population in the country, which, you know, and it's the third highest income per capita in the country, right? So you're not poor when it comes to earning your money. So why is your property prices, like as a comparison, location and whatever, and quality, lagging? And there's no fundamental issues, like you're saying. You're buying a better quality property for a cheaper price in a comparable, if not better, location, for 500 grand less than anywhere else you can buy it in Australia. So all of that ticks the boxes. All of that ticks the boxes.
If you said, where would you prefer to go out for a meal? Would you prefer to go out in New Farm or the Valley or Richmond?
Every day of the week, Melbourne.
Like you'd be in Richmond, in Melbourne, almost like even Brisbaneites. I mean, and this is the thing that staggers me. I just wonder whether it's going to be a slow creeper over time, and there's ones that'll launch and then they'll sort of plateau at some point, and then maybe some of like Melbourne might be just one of those creepers. And
well,
that's a contrarian view in me, just purely from a stock market, not a property logic.
Well, what do they call it? Latent value or something. Anyway, so those who are too close to it undervalue it because of the nowness of a tax. So they undervalue it. So they think, oh, it's less, it's worth less. And those who aren't that close to it go, fuck, look at the fundamentals. So those who sort of aren't so close buy it because they know that compared to Sydney or Brisbane or other places, like, fuck, that's 500 grand off. And then you just know you can see it out, because then it feels like a pop, but it's actually the catch up of the value.
It's the lag. It's like it's the Bradbury.
Everything else falls over, and it's like, you know, he just kept the constant pace. So
I've trained for this my whole life. Well, well, I've got a bit of a call. We'll see it. Like this is.
What's your call, Fenton? Like my call's pretty easy, actually, because I think mine's actually pretty easy in comparison to 5 years ago. But what do you got for everyone?
Well, mate, I reckon 2026 in Australia and potentially the world is the beginning of the data center boom.
Crazy.
Everybody in my world this is and this is a stunning conversation. So what is it actually? Let me go up and then we'll come down. Data centers support AI, and they're needed. Data centers need high transmission lines and proximity to water to cool them. Just had some conversations in regards to projects which have great proximity to hydro schemes and things like that, and batteries and stuff, with ridiculous, like $1 million a year leases on agricultural land to build batteries near things that will then support a data center in the future. Right. So
they're power hungry, right?
Super power hungry, and they need cold, which equals either altitude, which we don't have in Australia. We just don't, right?
Come on, like mate, Mount Kosciuszko is pretty high.
Well, well, here it's Polish and it's Kosciuszko or whatever. I can't pronounce that anyway. Mags will kill me for doing that. But even like Perisher and the higher mountains, they're not high enough to maintain critical coolness for these things. So they need to be
not cold all year round. They're not cold all year round.
It needs proximity to water
Yeah.
in order to cool. It needs high transmission lines, and it needs not to interfere with with property, because property is expensive to claw back. So it needs to be on existing infrastructure. Anyway, that's the high level. AI is here to stay. I believe that absolutely 100%. And I just believe that's a fact. Second level is there are services, the picks and shovels of AI, which we've talked about a lot. And data centers are the picks and shovels. They are the infrastructure that will support AI and technology advancements, because AI will be in everything from farming to aviation to finance
Everywhere.
to everything.
Yeah.
It has to exist on already pre-existing transmission lines, because that's the only way to do it in a cost-effective manner. And it needs to upgrade the systems that are already in place. So my big call for 2026, for the next decade, maybe even millennia, who knows, is picks and shovels of AI and data center related activity. That anything that gets involved in this, and even Telstra stock took a jump, and I wonder whether it took a jump. And this is totally unfounded. I wonder whether it took a jump because maybe it's going to be involved in this infrastructural side of the equation. But anything that sits data center, power transmission to AI from here moving forward for the next 20 years, that's my big tip of the Apples, the Nvidias, the big agricultural revolution, industrial revolution of the future. This is where my tips are, and where I believe that the money is going to be. And not the make $1 million in Bitcoin in 2 days money, but invest well 20, 30 years, and you will be 15 to 20 years, and you will be staggered by the kinds of returns that these companies are going to produce.
It's not going to, well, it's an interesting one, isn't it? Because it's not going to go away, right? So that the power requirement of AI. So how do we get access to this sort of stuff, Andy? That's kind of the question. It's kind of the $1 million question when it comes to, all right, that's great. I like it. How do you get access to, these things, right? So this is the current, the current and planned data.
I love this. This wasn't planned. You just had this stuff in the background. We never talked about what my number one tip was going to be.
I love it. But, Australia's got a fair bit of early stage stuff there. The US is fucking.
We're incredible. If it wasn't for our government, we would be one of the most progressive countries on the face of the planet, because Australians adopt technology faster than any other country on the face of the planet. And we do it in a Western commercial scale. And that's why they guinea pig Facebook, Google, TikTok, all of these things. They guinea pig it on Australians because we're early adopters.
Well, and look at this. I mean, you and I have chatted about this heaps of times. The idea that, certainly if we could wave a magic wand and fast forward to 50 years, you'd want the world to have cleaner energy into the future, whatever that technology brings, right? We don't want to, leave our world in a fucking schmozzle. But have a look at it.
What total output does Australia produce in comparison to the rest of the world?
Not Australia, but the world. But at the end of the day, we've got to mine in Australia because that's where our money is, right? Like, so, you want to be a poor country or do you want to be an export country? So you got to balance the scales, right? You got to understand, all right, if we're going to mine coal, what does it look like? If we're going to produce technology, can we make it better than, the old technology, even if it comes to gas and petroleum or whatever? Yeah. But also the idea, let's say, if you were to send your coal to China to burn in China and then they run a data center, well, why wouldn't you mine it 2 minutes away and burn it right next door?
This is the stupidity. This is the stupidity of what we're doing. We're sending our fossil fuels off and they're getting burnt next door, and we go, we're net zero, but we're producing stuff that is just, it's like, keep it here.
Yes. Yeah. Well, that's right. That's right. Keep it here. Right. So these are the conversations, really important conversations, I think. But
we've got the roaring 40s over Adelaide. Once that gets up there, it's going to China anyway.
Right. It's going. But anyway, the idea is that how can we get access to that investment, Andy? What does it look like? What does it look like?
Well, that's a great question for early next year, Jace, because
next year. Oh, the cliffhanger. The cliffhanger.
Well, mate, I'm in. I'm not there yet. We're putting a lot of investigation into it, but I had a conversation, and I have to leave it high level because otherwise it could go into advice territory. But had a conversation just yesterday, which was very illuminating, that helped me consolidate some of my thoughts from a professional you and I both know, and we think he's a very, very learned, intelligent man. And we were talking about this very concept, but when it comes to agricultural land, and it's like, well, if there's two bits of land that have the same sort of agricultural value, what makes one bit of land potentially more valuable than the other? And his comment was future potential for renewables. And I'm like, oh, what, fucking carbon schemes and shit like that, which and I'm not for that stuff. It may well be good, but like that's a real gambler's game, and it's been around for a long time and it's weird. But anyway, he's like, no. It's like, well, there are pre-existing lines that go across Australia that already have cables in them and that allow quick access to a pre-existing data cable or power cable.
Transmission cable or something.
Power transmission cable. And so the closer to these things that you get a future investment hedge. I'm like, that's clever. That's really, really clever. That's strategic acquisition of real estate based on some very, very clever principles. And I'm like, that's a real forward thinker. And so these are the sorts of concepts that I'm hearing in my world. And I'm going, okay, well, let's investigate this, because it will be the stocks of tomorrow that already exist today. And whether that's a Telstra that already has data lines in the ground that decides to take those easements and put high-powered.
Wouldn't that be a comeback for Telstra?
Well, shit, it would probably be the only reason for their existence for the last 20 years, other than shit service. Mate, I have out the front of my house copper cable that is probably older than the pyramids.
Hang on, Andy, didn't we spend 100 billion on fiber? Anyway, we shit the bed on that.
We'll dig those bloody lines back up, and we'll put these power ones back in. But and I'm not saying that. And that conversation was in a 15 to 30 year vision. That's the context of that conversation.
Well, 15 years is well within everyone's. We're all going to live to 90.
15 was the small scale, 30 was the medium scale, and intergenerational was that was the concept.
Yeah.
And so you will only be able to access this via real estate acquisition and or participation in stocks of the underlying companies.
Yeah.
But it's like there is, in my view, a change in the tide of portfolio construction, a change in the tide of stock markets around the world, of the construct of those markets. And it's very inflated in AI tech stocks at the moment and banking services in Australia. But now there's a new kid on the block, and it's AI, and it's going to need picks and shovels. And those picks and shovel companies of maybe today are going to be massive corporations and shares of tomorrow. And I think we're going to start to even see some of that, coming into play next year with the infrastructural spend, especially in Australia, based on a Labor government that basically say renewables, we don't care how much you pay for it and how much you suffer for it, we're going to invest in it. Those companies will benefit from that. And then downstream, that might actually help this side of the equation. Not that I agree that it's the right way of going about it.
Well, I think the likes of Tesla and like you said, you picked a winner this year, but I think the likes of Tesla and those guys, are going to benefit from those policies, and you got to be on that wagon. But listen, I think there's one more crack at this before the end of the year, Fenton. Andy hosts.
That's it. It'll be for next year. It'll be 100% for next year.
All right. Well, if you want to come along next year, Andy will be hosting that next year. But that's about it from us, Fenton. It's been a hell of a year.
It's been an hour and a half tonight, but mate, I am really excited about 2026.
Yeah, me too.
I think it's not going to be without its challenges. I think it's going to be very, very challenging in areas. I think that what you say no to will be more important than what you say yes to. Absolutely. And I think that I honestly believe that there's a risk on period whereby those people who dare to take risks in certain areas are going to succeed immeasurably. And I know that's ambiguous at the moment, but we've kind of given our thoughts as to where we're thinking. But you bring the themes in: not enough houses, too many people. Too much government spending means inflation, which means house prices and asset prices rise. There's natural hedge. If you think that the world's going to go into hyperinflation, well, we've got some things that you can do, right? And so there's some very clear indicators of what's going to happen. Exactly what's happening, we don't know. But mate, I've got a very, very good feeling about it because I think we're on the journey of the big. Well, let me just say this. Churchill said it. It was a wartime thing. It was, we're not at the end. It's not even the. Hey, it's not the beginning. It's not even the. Fuck, I've just totally butchered it. I used to know it off my head.
Mate, I was relying
Not
on
the
you.
end. Not the end. It's not even the beginning of the end, but it is perhaps the end of the beginning. And that's how I feel about next year. Is it's the end of the beginning, and we're off to a new set of races.
I completely agree. We've COVID is long behind us. Long behind us. We have a new normal that is in play, and it's it's changed the rules a little. It's changed the way we all behave, and I think for many of us, our lives have been, well, certainly I can talk for the people that I know, improved immensely when it comes to the embracing of technology and this stuff. So I think it's great, and I can only see it getting better. And us, for those of us who pay attention and don't get caught up in the drama of media and
I agree.
and mayhem, I think we'll have a great 26 and beyond. And really, I think for the next 10 years, I think we've got the trajectory. We've got a 10-year runway now before things change a little bit again. And I think they're going to change in 10 to 15 years because of the changeover of the baby boomer wealth generation transfer. But mate, there's money around, there's wealth around, there's opportunity around, and I think we've shook off COVID, and we're really gonna take advantage of it in 26 and beyond as an investment community, as a business community. So, folks, looking forward to taking that journey with you guys. Our first one is in January, the 28th of January. So we will be back with passion and fever, the dance fever, not the COVID fever. Back with the dance fever for 2026. Wealth,
100%.
Yep.
And wish you all over Christmas prosperity, but most importantly, well, if you're a trading business over Christmas, wish you just massive amounts of prosperity. May this be the Christmas season that makes a year, and that is the beginning of incredible things for you. If it's time off for you, then may it be the time down before the game on of an incredible year of 2026. Please hear these words: switch off the news. Now watch Netflix. Romantic comedies around Christmas and things of that nature. Bring some Christmas cheer. Turn off the news. Switch off the social media. just allow your system to just feel the existence of the world around you, which is fucking incredible, rather than screen time of captured attention, and just like enjoy being present with people that you like. And if you don't like them, move to people that you do and spend some time with them. But switch off these devices of mass distraction. Learn what life's about again. We all need to. I need to. Jason needs to. We'll be doing the same thing. And just where possible, enjoy the time together. Be safe. Be merry. Consume a little bit too much, but not way too much. And but just don't consume any of that bullshit media, because it will only make you unhappy.
There you go.
Have some wine.
Yeah, wine is good. Wine is good. That's it. Well, mate, been a great second season of Wealth, Wine and Wisdom with you, mate. Good to kick it off again.
Second? Holy shit! It's like 5. Second new season.
I think it's the second new season. Well, the first new season. The other ones were I think it was endless. But anyway, there you go. Good to hang out, brother. And Merry Christmas to everyone.
Merry Christmas, Dan. Happy New Year. And it's a Happy New Year from me.
It's a Happy New Year from him. Happy New Year and good night, folks. Thanks for hanging out. Awesome to have you here. See you in the new year.
See you next year.
Bye now.
Thanks for watching another episode of Wealth, Wine and Wisdom.
Make sure you like, subscribe and turn on the notifications so you never miss a thing, folks.
We'll look forward to seeing you next time.
Debrief the week with Wealth, Wine and Wisdom.
Every Friday at 5 p.m. Victoria and New South Wales time. We know that Queensland, South Australia, WA have different time zones, as does Darwin, but we're sure that you can do the calculations depending on whether it's daylight savings or not.
You can also catch up on all the episodes wherever you get your podcasts. Make sure you check out the Positive Mentor podcast from our 6-star team at positivementor.com.au.